I'm Sandi Siegel, president of M.E. Dey Company.
And I'm Ian Coxhead, University of Wisconsin-Madison, and this is another episode of Talking Trade. So, Sandi, we're looking forward to new trends in trade and maybe new trade policies as well as the new year comes around. When we think about China, the U.S. exports to China, which is the world's second largest economy and the only one with the only major economy with a positive growth forecast for the next year. Our exports to China are back now at 2009 levels. So we've lost about a decade of trade growth. What do you see changing about that? And in particular, do you think that the phase one trade deal from the beginning of this year is making a difference to export growth?
Well, I think my answer to the phase one deal is yes and no. And by that, I mean, in terms of in terms of China's commitment to buy more from the U.S. and the levels that we set, I think the recent numbers were that they have in fact bought half of what was committed in the phase one deal. So based on that, of course, many are saying that they totally didn't honor the agreement. However, I also recall when the deal was negotiated that a lot of economists said that the U.S. could not support, that kind of production and
those numbers were unrealistic, right?
So that it was an unrealistic goal. And I think to a great extent, that was true in regards to the agriculture and so forth. So I don't know that they were set up for success as far as that goes. The USTR, the trade, reps office definitely has stated that they feel there was success in terms of IPR and some of the other pieces of that phase one deal. On a practical sense, within our customers and exporters, and I think Wisconsin in general, 2019 was a huge decrease over the previous year, as you stated, on exports to China. China's Wisconsin's #3 destination. 2020 has in fact seen some growth, again, not to what everybody was hoping for. Our big exports are out of Wisconsin are soybeans and machinery. Personally, out of our office, we do a lot of machinery business. So there, again, we've seen some growth. Obviously, China's, big consumer, but then at the same time, they've got their inward focus of domestic production. So, I'm not sure, it's contrary to, at the same time, they're saying they're going to buy more U.S. product. So we've seen some growth. It's been such an unpredictable year, which of course nobody likes uncertainty, on a business level. And all of these trade wars and these, independent trade agreements, the recent, RCEP, that we were not part of, that strengthened, the South Asia, and European agreements are making us less competitive. And then at the same time, we've had so many tit for tat arguments in this past year. When you look backwards, even with Canada and the USMCA and things over agriculture and aluminum. And then, likewise, our aluminum tariffs and steel tariffs and our airplane, Airbus and Boeing arguments with Europe. So, we've got all these independent things that are combating some of the good things we're trying to do. So I don't know what the net impact is. I think, that's, again, speaks to the unpredictability of, and I think makes it really difficult for exporters to know where they stand in certain markets.
Yeah. Wow, that's a real glass half empty, glass half full kind of story, isn't it, Sandi?
Right. Exactly.
So I guess there's a couple of potentially interesting straws in the wind. One is that there's a sense, at least from the press reports that I read, that the Europeans are very keen to reestablish what we might think of as more normal trade relations with the US, and they've made some noises about relaxing some of the tariffs, maybe pulling back on a couple of the fronts that we're at war on at the moment. And so there's that. And then we do have two pretty significant trade deals that the Trump administration signed, the new NAFTA and their revision of the US-Korea free trade deal. Do you think there's any positive component in any of that that might give more cheer to our corporates?
Certainly within those regions, and again, for Wisconsin, that the USMCA is a good win. Canada and Mexico are, number 1 and 2 trading partners. But again, obviously just isolated to that group. And yes, I'm encouraged. I think Europe is such a strong, important destination. And that's why all these, Airbus and, Boeing arguments. I mean, Europe just slapped on billions of tariffs on US goods. And then, of course, all the digital, tax issues. So, again, I hope we can get past all that, if you will, and look at it in a broader sense. And I get the sense that the Biden administration will be doing that and looking at bigger picture, long-term decisions in terms of trade, because it does help the Made in America. It does help manufacturing and just general trade relations, and it helps strengthen our our partnerships with I think everybody has concerns as to the military influence and economic influence that China might be.
Yes.
So something that we can there's strength in numbers, as they say, right? So
Well, if 2020 was the glass half empty year, do you think it's reasonable to suppose that 2021 might be the glass half full? Is it too optimistic to say that?
well, I think there'll at least be a shift in the pendulum
Yeah.
in regards to how we approach things. So let's hope so.
Well, we'll wait and see. Sandi, it's been great talking to you as always.
Great, good to see you, Ian.
Likewise, and this has been Talking Trade.